All right, welcome. Give it a second. And we are live with Palantir's Q3 earnings report. Can someone let me know if the sound's coming through all right? That would be great. Until then, I will assume that it is. So we are looking at the headline here being that Palantir expects 40% revenue growth in the fiscal year of 2021, with Q3 US commercial revenue up 103% year over year. Good. Thank you, Brian. So let's just have a look at the stock first, because I was watching this earlier. It was up even before the release here, hovering around a little bit at about $28 and a little below. Then we had a drop right on the release of the earnings and a pop back up over 28 for the highest level we've seen in a little while here. And since then, the stock has been sliding down at and under 26, and now it's at the level you see right here. So let's sort of dive in and see what the actual announcement was. So this was for Q3. They talk about total revenue growing 36% year over year to 392 million. Now, this is a slight disappointment, in my opinion, because I think a lot of us were expecting to see over 400 million in revenue. Now, let me just see how that actually compares to their guidance. So just so I get this right, we will look at their guidance, what they were guiding for. For Q3, we expect 385 million in revenue. So when they deliver, it was 392, I believe. Yeah, 392 over, that was, let me just calculate it. 392 over 385 is not a huge beat. It's about a 2% beat on a already what I expected to be a conservative number. So not coming in huge on the revenue. Do we have any thoughts on that? Let's see what the chat is saying. Only 2% of usual volume. Okay. I saw the 2%. And I thought that was referring. Yeah, Brian, you had it a bit over 400. Yeah. So let's see what else is going on here. 34 net new customers. Now this is good. This is really good. This is very high. I forget what it was before, but definitely lower than this. So part of what's coming in on these new customers is the Foundry for Builders program. And some of it's probably the SPACs, but I'd guess more on the Foundry for Builders program. We'll likely hear about this on the call. Now, unfortunately, I will not be live streaming the call. I thought I was going to be able to, but I've got other stuff that I have to do. So I will come at you with a video tomorrow recapping the call. You can find other live streams of it on YouTube. But anyway, I think they'll talk about this. I think they will address where these new customers are coming from. They're not all going to be just straight up Foundry users. I think some is Foundry for Builders. So the customer count grew 46% quarter over quarter. That is very strong. But then again, with these customers like the Foundry for Builders program, I think some of them don't recognize until they're earning revenue. So perhaps these are from the, I'm not entirely sure actually, because I think they will address where these customers are coming from, because if there were 34 full paying customers, I feel like their revenue would be a lot higher. But let's move on to the commercial revenue, 103% year over year. I mean, that looks good on paper, right? That looks great. $101 million in free cash flow, 26% margin, adjusted free cash flow of 119 million. So 54 deals of 1 million or more, 33 deals of 5 million or more, and that also includes 18 deals of 10 million or more. Let's see how that compares to the previous. So before in Q2, they did 62 million or 62 deals, 30 and 21. So about the same, if not actually a little lower. Let me actually just open this up in a new tab to make this easier. So just to compare, because I like to be able to see what they're talking about here. Continuing on, just getting some of this, and here, I'll show you. I also have the Bloomberg terminal here. We'll get to that in a second. But let's also look, remaining deal value grew 50% year over year to 3.6 billion. Now that is to be expected, right? With more contracts, the deal value or the deal value should obviously be increasing. So the GAAP net loss per share came out to a loss of 5 cents, and the adjusted about 4 cents. I believe that's what they've been doing. I don't know if that's any different than, let's see what they did over here in Q2. That would be right here. Yeah, same deal. Adjusted earnings per share diluted of 4 cents. So a little bit better on the GAAP side compared to Q2, but pretty much about the same. I'm not seeing anything that really sticks out in a really good way, in a really bad way. So here we have the sort of breakdown. I do want to put this in hypercharts so we can visualize it. So we had $392 million in revenue, a $92 million loss. Let's just see what else we can plot in hypercharts to get this to come through so we can just visualize it, because that is only up to Q2. So you will see here, once I put this in, how it actually looks. So we add this quarter, 392. So actually, what's the quarter over quarter growth rate? See, this is why I was asking them before why it seems so conservative. And here we have the real numbers. That's a 4.5% quarter over quarter growth rate. I'm not impressed by that. They had mentioned to me some seasonality that could be playing into this number. So they were guiding lower than I think they usually do on a quarter over quarter growth rate. But yeah, we'll have to see. So I'll put in the other numbers later. If I check on estimates, so this is the actual figure. It's a little hard to see, my apologies, but not much of a growth. Like, you wouldn't look at this and see, oh, that's great growth, right? It's there. They're growing. It's just this quarter doesn't really show an enormous growth story. So let's move over to Bloomberg, but let me first check and see if there are any questions. Yeah, I'm not saying this quarter is bad. I'm just saying this is what I saw, right? So here we are on Bloomberg. So here's what they actually just reported for the Q3 earnings for 2021, and here's what the analyst consensus was. So positive means they beat in that respective category. Negative means the opposite. So hopefully you can see that okay. Maybe I'll try and make it a little bigger. Zoom in to 300%. Hopefully that's better. So they beat on GAAP basis, beat on revenue, or actually, maybe this was just, I don't know. I guess the analysts were expecting what the guidance was, so that's fine. So I guess they beat, but not terribly much. So just scrolling down here, yeah, pretty good on a GAAP basis. So the stock-based compensation, though, came in higher than expected. Now, this has been a trend. This has been a sort of recurring thing. And hopefully on the call, I forget if there's a question about it, if they're going to cover stock-based compensation in it, not like why is it happening, because we know why it's happening, right? Just an update on the trajectory of it. If it's still going to keep increasing, or sort of taper off almost. Or should we think of it as proportional to their employee sales force or something like that? A little bit lower on their cash. Okay, that's interesting. Did they buy something? Probably not. Oh, that's true. I wonder if we would see if they bought Bitcoin or something else. Doesn't look like it, though, if it only went down 2%. Revenue, okay. Cost of revenue. That's interesting. The cost of revenue, they came in higher than expected on the cost of revenue. Not sure if we'll see any explanation of that, but I think it's something to keep in mind. A lot of these are just fairly arbitrary numbers, but it looks like their operating expenses were higher than expected. Yeah. So like a lot of this, I can't imagine. It's not letting me. Okay, here we go. Yeah, I mean, like income tax expense 10x, like that's not, it doesn't mean anything really. It's just to get a visual. I'm just showing this to you to get a visuals for how they compared to the actual analyst expectations. So on non-GAAP, they were looking pretty good with the operating income and then, yeah, pre-tax income. So back to the stock-based compensation, though, because everyone loves to look at this. Again, there's the number again. Cost of revenue. So some of this, we'll have to see if there were any headwinds that they're able to talk about for this quarter, because some of these numbers are, again, lower than expected. Restricted cash. I'm not sure what that would be referring to. Deferred revenue increase, but it also decreased. Okay, we're done with this. I just wanted to show it to you. We're looking at highlights for the first half of 2021. Was that, oh, sorry, that's the wrong one I was going to say. Outlook, here we go. This is the important part. We can talk all we want about the numbers for the quarter, but what matters is going forward, right? Let's just get a quick check on the stock. It looks like it is back under 26. And let me just say one thing about the stock. Let's see how many people we have watching. We have almost 500 watching. Thank you for joining me. This would be the perfect time for Cathie Wood and ARK Invest to step back in. They like to buy after they see the numbers on the earnings reports. Right now, the stock price is lower than, I believe, where they sold the majority of their shares. So I would not be surprised to see some strength from ARK Invest buying when the market opens. Not expecting that, or I'm not saying that you should do anything with my suspicion of that, but just because the stock's down in the pre-market doesn't mean anything, really. If the stock was up, and it was, there's no correlation with how it's going to perform today, tomorrow, anything like that. So let's get back on over to the outlook here. And this is the first time I'm seeing this. For Q4, 418 million in revenue. So we just did 392. So 418 over 392 is 6.6% year over year. So we're already shaping up for a better quarter, revenue growth-wise speaking. Adjusted operating margin of 22%. I think, how does that compare? Does that compare to, do we have that up here? 22%. Oh, or is that the adjusted operating margin? Yeah, so I'm guessing that they just want to keep that in line. For the full year, this is even more exciting. We expect revenue growth of 40% to 1.5 billion. Now, this is something that Tom Nash was, when we had our talk, and we're going to have another one, don't worry, had alluded to. He wanted to see 1.5 billion in revenue in a trailing 12-month sort of deal, right? So he was expecting that a couple of quarters ago. Now we're seeing that for the full year of 2021. Or maybe I'm getting that wrong from him, but I remember him saying that number. So it seems like Palantir is sort of growing in line with what maybe he expects, and he is pretty bullish on the company. He's saying the company's either going to 10 or 20x or it's going to just collapse. So that's it. I'm just pointing that out because I saw that figure from him. 40%. If anyone remembers what they did last year, and I can pull it up, I'll leave it in the chat. But let's take a look at the free cash flow, 400 million up from, okay, yeah, so they're raising their guidance, their outlook, which is always good. Analysts love to see that because obviously it's a lot of confidence, right? Because you're not going to raise your outlook and then come in under your outlook. So really they're saying it's going to be in excess of, meaning a lot higher than, which is great. And then they love to talk about this per long-term guidance policy as provided by our Chief Executive Officer, Alex Karp. We continue to expect annual revenue growth of 30% or greater for 2021 through 2025. Now, it's interesting how they set this up because it almost looks like there could be more bullets. Why would there just be one bullet? It would be nice if Karp comes out and puts some more targets and an outlook out here. That would be pretty awesome so that we could hear more from him, where he thinks the company is going, where he wants to push the company, and that sort of thing. So let's get to some of these comments in the chat. I haven't been able to keep up. Stock-based compensation is down. Yeah, I'm not sure. How does Bloomberg do that? I feel like Negative 16%. I should probably check that. I didn't know what the negative. I thought the negative meant it was actually a bad thing. Let's see. Stock-based compensation. You are right. I was reading it wrong. This is the consensus. Okay, I'm totally wrong on that. Sorry about that. 222 million was the consensus, and they delivered 185 million. I was reading that wrong. I wasn't looking at the numbers. So negative means a decrease. I was assuming negative meant a drop, or sorry, negative meaning something bad is what I was thinking. But there you go. They were actually dropping all of these numbers. Well, I guess that the last 5 minutes from 2 minutes ago was useless then, but at least you got to see it. I'm hoping you didn't listen to me because anyway, now that we have corrected that, let's see what else. Let's close that out. So the earnings call is going to be in 10 minutes. As I said, if you had not seen, I am not going to be doing the call. I was planning on it, but some stuff came up, so I can't do it anymore. You can expect plenty of videos from me. You can find the call elsewhere or through the investor relations website. So I'm going to leave you in about when the earnings call starts, maybe a little before then. But here we have the financial summary for Palantir. Let me just check if they're updated. Yes, they are up to date. And here's the presentation. Okay, so we got 10 minutes to crunch through this. This is the most exciting part. They don't always post this right away, which is kind of frustrating. We kind of already went through some of this, so take a screenshot if you missed that part. But here we go. Customer count growing. Okay, yeah, this is a lot of the same stuff we've already seen. 54 deals of at least $1 million. Again, that is a decrease. I want to know why. And I'm guessing it's seasonality, which makes sense. Yeah, a lot of great stuff. I want to sort of get to the part because we don't have a ton of time here before the call starts. All good. Okay, here we go. I like this sort of qualitative stuff. From fighter jets to naval ships, we're driving innovation in the defense industry base. Okay, got it. I want to see what else they're talking about. Managing the value chain from part suppliers to charging stations. Not a Tesla charger, but not the point. Unique and diverse footprints across NHS, NIH. Yeah, it's crazy the caliber of the organizations that Palantir works with. Healthcare. I've been saying healthcare is something big. Foundry, and now switching gears to the commercial side, Foundry is the connective tissue linking analytics with operational systems. This is a very nice visual here. I like that. Day zero companies are using, I feel like they already said this in the last one, but all right. Day zero companies are using Foundry to reach escape velocity. Now, I love this term. And it really kind of proves they're in this for the right reasons, right? They're doing it to grow with these companies, not just to help these companies grow. And that's huge, all right? Sarcos, Wejo, Lilium. Let's see if we have any new ones in here. Okay, Foundry for Builders. Companies are wielding their data to scale and win. I feel like a lot of this is kind of reiterating. Operational APIs to orchestrate complex. I am not sure what that means. I will look into that. Here we go again. I'm looking, do they have anything on the crypto product? I'm still going through it. We've commercialized Apollo to allow our customers to meet their, I feel like this is something I've already seen. Am I on the wrong one? I feel like, yeah, the earnings call. If you want the earnings call, oh, sorry, I left that comment. Yeah, if you want the earnings call, go to investors.palantir.com and click earnings call. But we're almost, wait, so Jake, are you saying that was just that figure was wrong? I don't know. I'm just going with what Bloomberg was saying. So my apologies if Bloomberg, the gold standard, is wrong on this. Okay. This looks new. Streaming processing at the edge. They talked a lot about the edge before, edge AI, which means kind of localizing the operations for Apollo, which I think is a really key idea. and not something that maybe many people have done before. So we'll see if they talk more about this. Really, this is kind of leading up to the earnings call. Foundry is enabling carbon. I mean, that might not be new, but it seems like maybe my memory is just gone. But Foundry is enabling carbon and emissions management to convert beta to alpha. All right, I like that. Beta to alpha. Oh, here we are. Here we are. We are leveraging our deep expertise in AML and KYC, know your customer, to enable accelerated compliance across crypto and fintech. Oh, that's interesting. I mean, obviously it's fintech, but I don't know if they mentioned that before. So they're doubling down on the crypto product, putting it in the report, obviously. In Q3, we signed new deals with the U.S. Department of Health and Human Services, U.S. Air Force, NIH, and more. Great to hear. I think we had already known some of that. Meta Constellation is meeting its moment around the globe. Okay, so what does that mean, though? So, like, I don't understand, like, what do they mean by that? It's great. We saw it in the last one. Who is using it, right? Like more information would be great on this. And maybe they're about to cover it in 5 minutes. And I'll show you how to get to the earnings call if you're unaware. Okay, let's just see what else, because I've only got a few minutes left before the earnings call starts. A lot of great stuff to take a look at here. Just giving you my first impressions. That's interesting. Why are they including this? It's interesting. I mean, it's a great picture. It's just, oh, I think it's because they went public 1 year ago this quarter. Yeah, pretty exciting stuff. The financial update. I'm going to have to come to you with the financials, break all of this down later. But it looks like a solid quarter, not a breakthrough quarter of any kind. Let's check the stock. It's kind of stabilizing a little. Not a breakthrough quarter, a solid quarter out of Palantir. Some good numbers, revenue growth sort of in line with expectations. We're not seeing a tremendous power from the sales force, but this is not the end of Palantir. All right, the stock's down 2% or 3%. All right, we'll see what they have to say on the conference call. These are just my quick thoughts. Sounds like a lot of it was wrong. I'm sorry about that. Okay, looking ahead is just if you want to visualize that. Great. Okay, let me show you how to get to the earnings call. Investors.palantir.com. This is where you go. And then you go to events, or actually, is it going to show right here? I don't know why it's not loading. You just go to events and then webcast. You just click that. You'll get taken right there. Or you could find a stream of it on YouTube. I said I would direct you guys to Felix and Friends is doing one. So if you want to join his, you totally can. But these are just my thoughts. I will come to you with a more thorough video in the coming days. And we'll have to see how the stock reacts. I wouldn't be surprised again to see Cathie Wood and ARK Invest buying on the weakness here in the morning, perhaps. But I will leave you for now. I'm sorry I wasn't really able to. Yes, I did see that. That is huge. That was news yesterday. I'm sorry I wasn't able to interact too much, but got to cut it off now. Maybe at next earnings we could do the full deal. But I'm going to end the stream now, and thank you for joining me.